Hope everyone had a decent week. Oh, Forex gal. You guys, I really didn't know that. I tell time by candlesticks, right? So sometimes I can't see the clock by candlelight. Hi, John Lee. How are all my warriors doing today? Majid, how are you? Okay, so I've stayed pretty focused on stock indexes this week. And when you're in the zone, you stick with it until it changes. So, it's very important what happens here in the market. And I want to welcome all our viewers from investing.com. And, mainly being in the stock market, this is very important the next 48 hours for you. Okay, so turnaround Tuesday worked, right? And we were here yesterday. Let me go to a shorter time frame. Okay, and I had moving averages up here around 3120, and the 2-day off number is 3120, and the high of the rally was 3118.80. So you might say, well, God, it didn't get to 3120. Well, I don't know your trading style, but let me coach you. If you're waiting for numbers, am I in a trade in S&Ps for a couple handles? Am I in currency trades for 10 or 20 pips? So, sometimes trying to be too perfect creates opportunity loss. So, if I'm wrong, it might cost me a little bit more on the loss, but I would rather know I'm in when a market's in an area, at least a piece. Okay. So, I mean, a handle away from an area that's important to me, that's, you know, put your toe in the water. Okay, and keeps going, you still believe it, you put another toe in the water. So sometimes limit orders limit success. I would rather know I'm in the trade instead of having the stress of, oh, will I get filled? Sure, it's different when you're sleeping, but yeah, it is, Zig. It's the enemy. Perfect. Okay, so just something for you to consider. If you're using limit orders all the time and you're in front of your workstation, just go to the market. Then you don't have the anxiety that, oh, will I get filled to enter? Because, one of the worst feelings as a trader is knowing the trade. It went according to plan, but you were unable, which is going to happen when you're sleeping if you're self-directed. But if you're in front of your, you know, your trading station, you just go to the market. So anyway, that's my coaching lesson. I mean, how many out there have had that happen to them, not just once, but multiple times? And you have to ask yourself, would it have been worth it to risk another 10 pips to, you know I'm in the trade? I mean, I'd rather be stopped out than watch a trade go without me that I had planned. Okay. Just a little something for you guys to consider. So turnaround Tuesday worked, and then the rally up here. This was a great trade. Did any of this you watched that? Oh, okay, in the simulator. Okay, Monica. Any of these suggested ideas help you guys this week in stock indexes, or are they mainly FX trading in here? It help any of you guys? It help you, Brock? You're a subscriber though, right, Brock? Okay, cool. So anyway, oh, it helped you guys? All right. Well, you know what? Why not say thank you with actions rather than just words, and say thank you to us by joining? So either of those two S&P calls would have, just a one lot would have paid for a year. Okay. So that's how I would advise you guys to thank us for working hard for you, even though we're giving it away free. It costs us to do this. Okay. So this is why it's very important this week, how we finish here. Okay. Yeah, I like adrenaline. So anyway, 2-week reversal. Oh, just move this. You just count back 2 candles on the weekly, and it comes in at 30.8940, right? So look at these lows that we have here the last couple of days, just right above it, 391 or so. So if we could close under here by Friday, you have a 2-week reversal. And just like currencies, you could be right about the direction of indices, but your trade selection is still important. And I've been talking for a while. I was expecting more weakness in the Nasdaq than in S&Ps. And like S&Ps are up 6 handles and the Nasdaq's down 6, but you could just tell by percentages, Nasdaq is giving up the ghost at a greater clip. It looks like we could have a failing rally here. We're already we went through the off number here as well. It's 82.48. And one other thing I just want to touch on that it's working, but Euro's done nothing wrong, and maybe we'll start to get some acceleration here finally. So it's still heading up. I still think that I have to give the wedge the benefit of the doubt. There's only one thing that's bothering me here, and it's just trader intuition. It's taking too long, in my view. And we had 2 tests at 110. I don't like. We can't get back down here again. All right, maybe it'll hold for a candle or two, but already had one retest here after the breakout, and for it to come all the way back down here to the breakout, it bothered me a little bit. But it's holding, and I've gotten skeptical and jaded too early before, so I'll let price tell me instead of my biases or my gut feeling or intuition, and still think that there's a chance that we're heading up towards the top of the wedge. And if we actually get through this 111.60, it's just molasses is, my issue with it. Maybe it's the new normal, but we get through 1160, it's going to count up here, measure up here to 114. But I'm telling you, if we start taking out this low and retest this level again, there could be a big shortcoming. One of the reasons I say that is the DSI on the dollar is no longer 90. It's down to neutral in the 50s. Okay. And we're not as pessimistic. People aren't as pessimistic about the euro. And the other thing that's starting to bother me a little bit here is even with the weak dollar, the yen just won't break down. Under today's low, it's having problems. But look how many. It's tough, isn't it tough? And we start getting back over 109. I think we're going to squeeze, as Blake would say. Also, the Swiss, we had a decent, little break from resistance here, but look, we're firm again. And the Swiss was still up. Strange trading in the Swiss, and I'm going to ask Steve about it. It's probably Euro Swiss related, but yesterday when the euro was up, which was a little bit of dollar weakness, the Swiss was still up about 23, 24. To be short the Swiss, I want to see the opposite, right? I want to see if the euro is up, Swiss, and I'm shorting it, Swiss should be down, not up 22 pips. So there's something going on here too. Maybe they're just going to squeeze people, and it's with the dollar too. I mean, failed where it had to last week, but again, it's like molasses. Watch this area because 97 and a half, because we get back down here, just like I showed you, if we had another test in the euro, if we have another test in the dollar at 97.10, then I think it's history, and then it measures down here. But I'm thinking there might just be a chance, especially if we're going to get a correction in the S&Ps and we get that 2-week reversal, that we pull back to here and we get one of these from here that could take us back to 61.8 or 78.6. So, and if you want to be shocked and surprised, trade crude oil, right? So, looked like we were breaking down out of a, look at this. Didn't that look like a breakdown? Look at that. So, maybe we are still heading up to this 61.8, maybe the top of the descending triangle line. And this is also why NASDAQ could be weaker, because there are a lot more oil companies, major multinationals in the S&Ps. No oil, it's mainly tech, biotech, all kinds of things in NASDAQ. So that's what I'm seeing. Any questions? News breaking. It's up 9 ticks. I wouldn't say it's exploding. And gold is down 460. Okay, well, in the new normal, we overreact to what used to be, quiet, dull action.
Well,
Now,
there's an article from the South China Post,
yeah,
which is saying that the December 15th
tariffs.
tariffs may be removed.
Oh,
Yeah, I mean and they're saying that even if they haven't come to an agreement by then, the December 15th tariffs might be removed. So that spiked up futures and
oh yeah, and
um,
S&Ps too. Yeah,
S&P spiked up. The dollar yen moved like 15 pips or something.
yeah. I
Yeah,
mean,
or actually
you
less
got
than
most of the
that.
reaction in the S&Ps.
Yeah, everybody's pretty positive that there's going to be a deal still. I mean, that's what's keeping the market propped up right now. And I'm still in the camp. It's going to be well, first of all, I'm if there is a deal, it's going to be the buy the rumor, sell the news. So you just got to let the deal happen, and then you sell the news. But between now and then, there's going to be a lot of headlines, and then I still think there's a very, very high risk of things falling apart. So that's my take. But
Yeah,
anyway,
I don't think there's going to be a deal.
so the news article from the South China Morning Post is something that it's not a
All,
not a
all I know
it's
is
not the end all be all source.
If I was Xi, and I saw how Trump reacted after the testimony yesterday, and how he wrote down on and big letters, I want nothing, and his anger. He looks a little bit unhinged right now. Who wouldn't be, right? But in his psychological state, why is China gonna, besides needing pork, going to bail him out?
Right. Right.
That's what you were saying, right? I
Yeah.
mean, and he's weaker now than he was when this whole trade war started, right?
Right. So
Anyway, just what
no,
I'm thinking.
no, and it's some great points. And I went on Twitter yesterday, and I just kind of went on a rant about if I was China, I would be thinking, let's string them along as long as possible, and let's crush them. I mean, and it's not this is not a political statement.
I know.
I'm China, and you know
The art of the deal.
it is, and you got.
Only he's on the other side of the art.
Well, that's the thing is, you see his temperament, you see his feathers are ruffled. He's not
Oh
really,
boy.
he's just not really, he's very reactive at this point.
Yeah.
and yes, China's economy is slowing down. So is ours. So is, everybody's economy is slowing down. So globally, um, but if you're China and you just don't want to deal with this guy because he's been a thorn in your side, how are you going to hurt him? And it's really just hurting equity market prices, because this is his standard. His standard is, I don't care what happened with paying off hookers, or impeachment, or what happened with Ukraine. It doesn't matter, because stocks are up, you know
Yeah.
1,000, whatever percentage they're up since I took office. But if they take that away from him, then
Yeah.
what does he have to stand on? And that's, if I was China, and this is my point yesterday, if I was China, I would hit him where it hurts, and that would be stringing them as long as possible. And I think maybe even next year, keep the talks ongoing. You never want to, you don't want to. You don't want to say it's not going to happen, and then you string them along until whenever you feel that the time is right, which I would believe in the beginning of next year. So we're probably going to see this back and forth, and we might even get a phase one agreement. But I don't think there's going to
just
be
posturing.
There's never going to be a final deal. Not with him in office this term. If he wins the next term, then we're talking a different story. But if they can string him along, and then phase one gets done, which will be a watered down deal. It's really going to be it's going to be like, oh, the tariffs got removed, and blah blah blah. And they're going to agree to buy some agricultural products that they were buying before anyway. They're just going to go recommit to buying the amounts that they were. It's going to be a watered down deal. Markets sell off a little bit once there's a phase one deal. Then you hit them next year and say, we're done negotiating with you. And then stocks actually really will come under pressure. And then what does he have to stand on? And that's, I think, if I'm China, that's what's going to happen. But again, these are just all ideas and thoughts. And am I positioned for it? Slightly. I mean, I have some dollar yen short exposure. I actually covered some yesterday. Here, let me go into.
Go ahead, buddy.
Yeah, I'll take the charts here. And good morning, everybody.
Good morning, Blake. By the way, what do you think?
You had to throw it in. Yeah, go ahead, Steve.
No,
go ahead.
You were on the subject, so I wanted to ask you a question. I think there's a worse alternative scenario. They might get under the table some concessions and go along with it. Of course, we'll never find out what, but that's also a scenario, right? Because they know how much Trump needs it, as you very well said.
Yeah, I mean, I guess, I think that would readily leak, but that's just me thinking out loud. But here's the thing: is we have to stay nimble. And
Steve, that's projection. That's what you do. You think Trump's going to do it. Under the table, Steve Volge.
Oh yeah, I think he's the type of guy that would do it. Yes, if that's what you're asking me. But just to be fair,
I'm saying you're projecting your own
psychology.
You're not.
I'm not. But just to be fair,
I was wrong.
But just to be fair, I don't think that Trump is an exception in that, right?
Yeah,
so it's a political statement. I think that the vast majority of politicians might be willing to do something like
that. Steve doesn't like politicians.
So the point of why I tweeted that out yesterday is the market is getting stretched, and I think it even has potentially further to go. But I think if you're going into equities at this stage in the game, you're in the acceleration phase of what could possibly be a blow off top. You have to go in with protection or a very defensive mode. I was telling some of the traders in the chat room, the ones that were there kind of later in the day, I have received, it's interesting, I've received as many calls from friends and family members in the last 2 weeks about the stock market that I did regarding Bitcoin, because Chi, who's also in our chat room, who's in New York, that he's been in our chat rooms for almost 10 years. I would say probably like 8. I've met him in person, and we talk all the time. I love having conversations with him and a lot of the other guys and gals in the chat room. Um, he goes, did you receive as many calls that you did about Bitcoin when, it was last December when Bitcoin was trading at 22,000 or whatever it was? And I'm like, you know what? Yes, actually, the amount of calls that I've received, and I don't get people that know me know what I do. People that know me know not to talk to me about work, because I don't like to talk about work. Like, when I see people in a social setting, they know that I trade currencies and that I do currency analysis and I have a currency analysis company and blah 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 blah. But none of them, they know I shut them down. As soon as conversation starts, I'm like, yeah, it's boring stuff, and let's talk about you and let's talk about like the world. I don't want to talk about currencies. I talk about it, 15 hours a day. So I don't.
Yeah, you're trying to get away from it.
I am, and people know.
I feel that way too, Blake. Enough business.
No, I'd rather talk about things that are,
Football.
Really, well, just things that are, I'd like to talk about.
Chicks.
Just more deeper subject matter than economics and, and trading and whatever. So anyway, so people know. And so when I start getting calls randomly from people like, what do you think of this breakout? This is there's going to be a China. I got people calling me saying there's going to be a China US trade deal. And then I had this, I had this interesting chart. I think I deleted it. I'm pretty sure I know I deleted it already.
Forex Gal wants your phone number to call you.
Wait, hold on. Currency. Hold on. This is interesting. I can do it via the chat room, just since we keep 3 days worth of data here. So because we have so many messages, that we have to delete everything after 3 days because we can't house all the stuff on the server. So this is really interesting. This was posted by a Twitter guy. Check this out. Who owns U.S. equities? The 48 trillion of U.S. equity market cap broken down by investor type. Households 34%. That's 401ks, IRAs, that type of thing. Active mutual funds 17%. Retail total of 51%. Then you have, foreign investors, passive funds, pension funds, hedge funds, other. So one of the reasons why I found that so interesting, I'm going to get rid of our chat room. And sorry, guys, I know you guys like to be on Jumbotron sometimes, but the reason why that's so investing, that's so interesting to me, is because if you really want, if you're China, and I'm going back to the whole China conversation, you really want to hurt Donald Trump, and you see statistics like that or similar to that, and you're like, wow, if I really want to hit his base or his support, just take down the stock market. How do you take it down? And you pull away from the trade talks at the right time. And that in its most simplest form. Obviously it's more complicated than that, but and that's why I sit here and I watch the stock market and I go, man, you just got to be really, really careful here. I hope we get a phase 1 deal. I hope we do, because I actually want to sell stocks at that point, whether it's the S&P or whether it's buying more yen. I don't know, but I'm going to sell risk. Let's just put it that way. And I hope something comes up soon. Here's an interesting article, and I'm going to pull this over. This is via Bloomberg. It's an opinion piece, and I'll just pull it up for you so you guys can see it. The unnerving mystery of a 6.6 trillion dead calm. This is the FX market, and this is how eerily quiet it is. And this is the point of this news story here is that we're seeing volatility levels at those levels of 1970. I was born in early 1970s, like 72 is when I was born. And they're talking about the currency market being that calm. And that is, really a scary thing, because the market can explode at any moment in currencies, in equities. And we're seeing this pent up energy that when there's a move that happens, whenever it happens, whether it's today or 2 weeks from now, or I hope it's today, it'd be nice. But whenever it happens, we're going to start to see trends that develop that just will not let you back in. Like, you see a sell off in the dollar or a rally in the dollar, and you're just not going to be able to get back in once it starts. There's going to be a catalyst, whether it's, my assumption is it's going to be a trade deal catalyst, whether it's phase one gets done or it doesn't. But at that point, whenever that happens, we're probably going to see an explosion in volatility, and that's going to be something that is going to be probably pretty jaw dropping. That you have to be around for it. You have to be ready for it. And I think this is the time where you have to, whatever positions you have on, you have to make sure you've got some sort of defense mechanism, whether it's a stop or whether it's hedged or something, especially when you're talking about the S&P. And so I just wanted to talk about that. My idea is, just because I have ideas doesn't mean it they come to fruition, because they don't. I just think out loud about things all the time. So and that's what my Twitter rant was yesterday. For those of you that follow me on Twitter, it was more of a think about it from like their point of view and how they can really wreak havoc on the current administration and quite possibly equities. And so this FOMO idea that we have in the market, where people just don't want to be not involved when there is some sort of China-U.S. trade agreement, is getting a little scary. What will get me more worried about the equity markets, just for those of you that trade equities, is once you start breaking back below these levels, like the 3070 to 3050 level in the S&P, that would be like a throwover of this trend line. If that happens, then I'll be really more concerned. But again, these are just thoughts that go through my head, especially as markets are so quiet. As I pulled up for you guys, the Bloomberg article just shows you how quiet the currency market is, and it's eerily quiet. Now, one last thing before we go, you have to watch the euro here. The euro, speaking of quiet, the 200-day moving average now comes in at this key resistance here, which is obviously 111.80 roughly. So we got to watch that very carefully, as we have Christine Lagarde tomorrow morning. I think it's at 3:30 a.m. Eastern. It's 1:30, I believe, my time. So it's going to be 3:30 a.m. Eastern, which I am going to get up for, which is going to completely ruin my Friday. But that's I hate getting up at 1 o'clock in the morning to work. But this is going to be her first speech, and I believe that you have to be in front of your computer for it. You have to be. She might really set the tone for the European Central Bank tomorrow morning. So that's the risk. So I'm hoping that we get some sort of volatility tomorrow. Just keep in mind that the euro's nudging with these trend highs. 618 retracement comes in right around 111, 111.05, 111.04. Break above that, we'll start seeing these highs again. And just keep in mind that the 200-day moving average is right there as well. With that being said, I want to pass it over to my colleagues, Steve and Stelios. I think we have some news coming out, right?
We do in 5 seconds. Philly Fed is the main one.
Oh, crap. Philly Fed.
Good timing, Blake.
Yeah, sorry. Well, I guess I'll sit here for it. Philly Fed. Well, jobless claims.
Philadelphia cheesesteak.
Yeah, we're waiting for it right here.
And the breakdown is actually important, like new orders, employment, prices paid. That's always important.
Weird that the here's Bloomberg here, just so you can.
It's not out anywhere yet.
No, there's wait, where is it? Philadelphia Fed. Jobless claims came in line. So watch Philly Fed right here. We're looking for 6. Prior was 5.6. So go on. Somebody.
They're trying to find the negative sign, are they?
Yeah, right. Where's the minus? Just kidding. Wow. Weird.
I got initial jobless claims, by the way, on my data flash, Blake. So perhaps you need to refresh it because I got it along with US continued jobless claims.
Oh yeah,
data.
I probably do, but that's fine.
Okay,
This
maybe it's going to be
Bloomberg here.
late a few minutes.
I also use Philadelphia cream cheese on my bagels in the morning.
All right, well, I'm gonna pass it over to you guys. Good luck today, and you know, I gave you some things to think about regarding China. I'm sure you guys will discuss it. I have again, I am short dollar yen, so hell, I'd be paid handsomely if the trade talks fell apart. But really, I think that the Chinese that's a big risk. So, and I think the dollar yen has not been moving up with equities, and that's something you have to pay attention to. But I'll leave it to you guys. Have a great one. Good luck. I'll see you guys tomorrow morning. I'll be really tired. And
so you're going to go to bed and then wake up?
Yeah, I'll go to bed at like
8.
Get up at 1. Yeah, something like that.
Okay.
Yeah.
You're an owl. You're an owl tomorrow, Blake.
I am.
Okay.
Thank you, Blake.
There you guys.
Thanks, buddy.
Thanks, guys.
Good hunting.
Right.
Bye, mate.
So, Blake mentioned China. Yes, mentioned China. We were actually discussing this yesterday on the webinar. Remember this congressional bill, which effectively supported demonstrators in Hong Kong, and China definitely didn't like that. And you know, we said, okay, this is just words.
10.4. It's a good number, by the way. I'm sorry to tell you. Yeah.
No, carry on. Good. 10.4. Okay.
Yeah, it's much higher than
can't
expected.
see the breakdown, but as soon as that's out, I'll have a look. So we were talking about that yesterday, and then we had this morning, actually, which propped up the equity markets a little bit, where there was an article where which said that China have invited Lighthizer, the U.S. trade negotiator, for more talks to China, I think, and so that brought the market slightly higher. Then we had this headline, half an hour ago, about the 15th December tariffs being delayed. You know, it's you know, the market's base case, I think, is still for some kind of trade deal to be done, and that's you know, that's risky. That's risky for sure. Okay, actually, Paulie says employment's 21.5 and orders are lower. Employment, that's quite a bit lower than from last month. And orders, so employment's lower, new orders are lower as well. Let's see prices paid as well. I don't have the number yet, but I'm sure it's going to come through at some point. So that's the situation with China is still very fluid, and you know, we just have to wait. There's nothing else to do, and I'm afraid we might have to wait it out until the elections. So 12 months of this. Nice.
I think at least phase 1 will go through until the elections, but I very seriously doubt that I think what's going to happen is that, you know, they're going to take more time to go through phase 1. They're going to end up doing like phase 1, and then they're going to start prolonging, you know, phase 2, which is going to be like advertised, you know, like the big thing. And then we're going to be near the elections, and Trump is going to be like, re-elect me so I can actually, like, you know, get the maximum out of like phase 2. So that's more or less what I expect, unless there is like you know, a massacre in stocks or whatever, in which case, you know, he will be in totally different pressure to produce something different.
Absolutely. The other thing I want to mention is from the UK front, we had the Labour Party leader, Jeremy Corbyn. He's going to unveil his election manifesto today, but he did say a few things already, and I quote, "Bankers, billionaires, and the establishment are going to be targeted." He said he's going to add taxes to fuel, to oil companies, and just like a good socialist does. Basically, he
Yeah,
promises a lot of money.
which has worked magnificently in the
Oh,
past.
yeah.
You remember the rather recent case with Hollande and France that he
Yes.
imposed like a tax, like a wealth tax, and just millionaires just started leaving the country. I mean, relocated in essence, got like second passports or whatever. So it was the result, of that policy was so horrendous that they actually had to stop it. But
Yeah,
as
and
it seems,
if you think about it, these are the people you want to have on your side because they create jobs, they create, or the opportunity. It's
yeah, but what you're saying now is logical. So that by default means that a socialist can't understand it.
yeah. But anyway, that's what he's been promising. So more money from taxes from the rich or whoever, and then more money to give to the rest of the
course.
people.
The fun
in
part
theory,
is
it's
that
not a bad thing, but in practice, how it's done, it's definitely not.
the fun
right
part
way
is
to do
that they're promising like to the, let's say, 98% of people, huge amounts of. Oh, wait a second, because I got.
By the way, Sean, that's a very good joke. Anyway.
Is my screen again up, Stelio? I'm asking because
Yes, yes.
we had a
Yeah.
power outage, and one of my UPSs that supports most of the screens is
No,
dying. So-
you're live and it's refreshing as well, so you're good.
Okay, good. Just making sure. It
Yeah.
was a momentarily power outage. So they're promising like 95% of the people, giving them stuff that there is absolutely no way that you can, get that amount of money from like 1, 2, 3, or 5% of people. And the thing is that the most sensitive group of people that can easily relocate is people that actually have a lot of money.
Yep.
Yeah, I mean, so we've seen it over and over again. This doesn't work. End
Yeah.
of story.
Yeah, you don't fight people who have lots of options, basically.
Exactly like that.
But
Exactly.
the thing is, we know who Corbyn is, what he stands for, what he wants to do, and his polls are still showing him behind. So I always say if this was in a country like Greece, he would be ahead by a wide margin. But
Oh yeah, for sure. There's no
but
question about it.
they're not buying it at the moment. Let's see.
Okay.
Anyway, that's it. That's about it. There's not much else happening today, as far as I can see. Prices paid actually just came in now, quite a bit lower as well. So it's all the sub items are lower, but the headline number is higher. That's interesting. Very interesting.
So what was the component that pulled the main number that much higher?
Well, capex much lower, employment much lower, new orders much lower, prices paid also lower. But I don't know what pulled it up. I need to go and go into more detail.
Yeah, that's going to be quite interesting, actually. Okay.
Yeah.
Okay, so let's go to the markets.
Hey, Stel, you're the most interesting man in the world. You know that commercial? The most interesting man in the world?
No, I don't know
seen
it.
it.
You guys don't see that? Oh,
no.
Yeah, he's drinking a beer. He retired, so they're looking for another one. Who knows in the audience the commercial, the most interesting man in the world?
If it's a speaking part, I'm sure Steve will take it.
No, you'd be great. Okay, anyway. All right, Steve. So yesterday in the S&P, give you any more conviction about that it might be rolling over from Tuesday?
It's not a good close though. I mean, for the bearish case, I mean, it's not a good close, right?
When yesterday?
We got already counting today's daily candle. We got a nice attempt to roll over, and I think it would have been a great signal if we closed below that candle there. So I would have wanted to see like a close below 3,097, and that for me would have been, a magnificent signal that we're headed lower. But the candle we left behind is more one of an indecision. Now, I'm not saying that the bearish case is dead, right? No, I'm not saying that at all.
It just wasn't confirmed. You need action, and that's interesting. The 2-week off number is right around that 30. What is it? 3089, which is 10 handles or so under the lows of the week.
Yeah. So I want to see a black candle, and I want to see a daily close at or near the lows. You know what I mean? To see that, because I think that is going to what is going to make the short-term long positions capitulate. Like thinking, okay, this is a good place to take some profits, and that on its own can help the index move towards the first objective, towards 3050, or even towards the next objective, which is like 3020. So
do you agree NASDAQ is weaker than S&P's?
The NASDAQ, let's move on the NASDAQ. The NASDAQ had a worse close yesterday, but it has also had an overthrow, which the S&P didn't in the wedge. You can see it here. I mean, yes, it did have actually, but a smaller overthrow. So same situation here. I want to see what's going to happen today. I mean, NASDAQ rolled over nicely yesterday. Would have been nice to see it close near the lows. It didn't recover so much of the losses as the S&P did.
Okay,
But
so you agree it's weaker.
Yes, it is a little bit weaker, but I think it's a little bit premature. I want to see what's going to happen today and tomorrow.
Yeah.
And
anyway, NASDAQ's my preferred short because
it's still a good
demonstrating relative weakness to the S&P.
It is still a very good area to look for rejections, right? Short-term rejections, because we know that at least 3 of the 4 indices are on top of major resistance areas. So yes, it is an excellent area. Forex Gal was saying, I think as an incumbent, he needs market up, will not win if a recession correct. I
actually heard the opposite from the guy who wrote The Fourth Turning last night.
I might be mistaken in that, but I think there has been no president that has ever been re-elected during a recession. And if I'm wrong, must be only one case.
Roosevelt.
Yeah, you might be right actually about it. Yes.
Oh, I am.
Yes. So yeah, I think it's the only case in which we got a president getting re-elected through a recession. So that answers that question. I totally agree. The only thing that that's keeping his chances up is the claim that the economy has been improved under his presidency. By the way, if we take into account the expectations for fourth quarter GDP as they currently are from the Atlanta Fed, for example, which has been more accurate. So far, Trump's annual average growth does not exceed the last 4 years of the Obama administration. So no matter how he tries to spin that, he has managed to produce roughly the same growth as the US had the previous 4 years, with one exception. He has accelerated deficit increase by a lot. So seeing the numbers objectively and taking stock markets out of the equation, because stock markets anyhow do not reflect the real economy most of the time, and when they do, they have to violently misprice. We've had a recent example, right? Imagine of the stock market. Think of the stock market in 2007. Did it reflect the real economy? Absolutely not, because if it did 1 year later, it wouldn't have been cut in half. So, looking the real economic numbers, Trump hasn't managed to achieve anything more than Obama, which he accused of like underperforming in the economy. So, that is an objective reality. I mean, numbers don't lie. Is there a deal where the market will feel it the most expect for USD and yuan market will feel it the most except if there is a deal, what market will feel it the most? Yeah, that's a good question. So which market's going to react more? Likely assets correlate. I think first of all, I believe that if there is a deal, it's going to be more beneficial for the Chinese. So I believe that the markets that are correlated with China are going to benefit quite a lot. So for example, if we're talking about Forex, I think that the Aussie, here it is. I think that the Aussie can benefit quite a lot. The Kiwi can break out again. And Dale, am I still on? Something's up with the power here. Just let me know if my screen is still up. Because we have some like power issues. Okay, thank you. I need to replace that UPS. I have one UPS on my main computer on my main screen, and all the others are running on a second one, but probably its battery is dead. The Aussie yen and the Aussie Kiwi as well will benefit quite a lot. So where is it? Here it is. Aussie yen. There you go. Oh, by the way, the Aussie yen and the Kiwi yen are two markets I anyhow wanted us to have a look today for the following reason. Aussie yen is testing. It has been testing actually for the last like 4 or 5 days. It has been testing support of this ascending wedge, right? So a breakdown from here is going to be a bearish event. While the Kiwi yen has been trapped in a range. You can see it much, much better if we move to a 4-hour time frame and you'll have a look at Kiwi yen. You're going to see that Kiwi yen is actually trapped in this range, currently testing once again a resistance. So from a risk reward perspective, doesn't look like a bad proposition attempting a short here with a very tight stop loss, right? Because above 70, then we're going to have a totally different situation in hand. We're going to have a rectangle coming in play, which would imply a move higher towards like 71. Okay, but being currently at resistance, why not? We might get once again a rejection from here. Just look how many times since what was it? Exactly a month ago, actually. It's exactly 1 month that Kiwi yen has been trapped between like 68.80 and 70. So 120 pips of range for 1 month. I mean, that's not easy to find. So I think those markets will benefit. I think that initially stocks, but we've mentioned that in the past, stocks are going to jump higher. But I also believe that it's going to be a buy the rumor, sell the news type of event. An initial push to new highs, I think, is going to probably be a fake move in that case. Copper might also benefit quite a lot. We have already seen copper making a move above this descending wedge, but it still remains trapped in this zone. If we get a US-China trade deal, I think that copper can actually accelerate much to the upside. So these are markets that I think can be affected. Okay, the dollar obviously as well. So let me see. We had more questions. Euro yen. So question about the euro yen. I don't have much to say about the euro yen, and you're going to find out why here. I mean, we remain within this ascending channel now. Is this a bullish formation? Not yet, right? Not yet. I mean, keeping in mind that we've been moving lower for quite some time, since February 2018. I need to see some type of an acceleration higher to indicate that this is not a simple corrective move like an ABC or whatever, something equivalent. You can see that we have a nice confluence of resistances up here at 121.75, the 200 daily moving average and the 78.6 of the last move lower. So I would be very cautious being long as long as we stay below that area. Now, Blake already mentioned that the Euro USD remains very decently beat, but even better looking is the pound, right? We had this channel, which was a textbook flag, right? Equality of the legs as well, lower ABC. We broke higher, we came down, we retested the broken flag as support, and now it remains to be seen if the cable is going to have the strength and the momentum to bridge through the 130 support resistance area, also obviously a psychological level, right? I think that above 130, we can find ourselves trading towards 133 rather soon. So, once again, I'm going to be advising, don't be in the wrong side of this move. This is one of the reasons why I still remain short the euro pound, and I have a pattern in play for that as well. We saw a recovery in the euro pound, like we saw one indecision candle, then one day higher. But as you can see here, seems like it's rolling over once again. My first target remains at 84.80. Previous lows here, you can see it. Also, that would be quality of this move lower to that move lower. So 84.80, I think, is easily achievable, and it's a very high chance that we're going to see something like that print. Wouldn't be surprised if we even saw lower levels than that. Unemployment, yeah, we already read the data. Gave a blind man cheese, greater for Christmas. He said it was the most violent book he ever read. Corbyn knows he has no chance, so they want to show that they're true socialists. I agree with you. It's very easy promising stuff when you know that you actually won't have to deliver, right? It's much easier promising like that. Upcoming Hong Kong election soon. Yeah, that's a good point. If the Labour activists don't elect a more moderate socialist democrat leader and shadow cabinet after they lose the general elections. Yep, 2 days ago, USD yen oil bonds were not confirming SPX peak, but since then, despite poor expected price action, yes, we're going to actually talk about crude and the price action it had yesterday, because it was one of the most interesting one. Price action for the SPX and poor fundamental news. Market has not cracked. Bear case over for now. Do you agree? No, the bear case is not over for now, but I have to remind you that I'm not looking here for a reversal lower and like an all-time high, having already been printed. I'm expecting a correction lower before higher. I still think that this market is likely to deliver one last like parabolic move higher before it fails. Okay. It is curious that the Americans don't get it that Republican presidents benefit and reap rewards of the Democrat president's economic actions. Reagan from Carter, Bush from Clinton, Trump from Obama, happens every time. In my opinion, the Republicans only achieve ballooning the government debts, so the young will pay even more every time a Republican president gets elected and applies his solutions of tax cuts for the preferred persons, thereby ballooning the public debt. Trickle down is very inefficient and doesn't work anymore. Okay, listen. In general, it's not good practice talking, politics, but I have a huge benefit being Greek and not having stakes in the game. So I consider myself like an objective observer. I have no stakes with the Republicans nor the Democrats. What I can tell you for sure as an observer since the 90s, because, I mean, at a younger age, you can't really assess things, is that I agree with one thing. The nature of the Republican Party has been completely eroded. And if the political system in the US was not so much rigged, so it would be bipolar, I think that now that the Republicans have shifted so much to the left, there is actually room and a lot of people that would be willing to vote for a party that would be more libertarian than the Republicans are currently. And I do agree with your comment in one respect. The Republicans keep saying that they are more fiscally prudent, but they keep adopting all the policies that the Democrats bring on the table, and then not cut any government spending. They just keep increasing it. So, in essence, I think this is one of the most basic reasons why the situation with the deficit and the US debt has gone in a spiral that is very hard to recover from. Okay, that is my thesis. The key is surprisingly strong when considering the New Zealand fundamentals can't diverge too much from Aussie and Chinese events. I do agree with that, but on the other hand, you also have to keep in mind that currently both the Kiwi yen and the Kiwi against the US dollar are testing major resistance areas. And purely from a technical perspective, I do believe that breaking through and closing above these resistances should squeeze the market higher, even if that's going to end up being for a limited amount of time. Okay. And keep in mind, which I'm sure you know, that very frequently fundamentals might end up not mattering for a lot longer than somebody would expect would make sense. Both Republicans and Democrats are going for the populist rhetoric. I agree with you 100%. And that's not a US phenomenon only. Unfortunately, globally, we do see a turn for populism all over the developed world, unquestionably. So that is a developed world phenomenon, and it's very intense and it's getting worse. There are explanations for that. The gap between the rich and the poor keeps increasing, and that always brings populism in the forefront. Unfortunately, and I want to make that comment, this is not a failure of capitalism. This is a failure of governments to actually follow capitalism. For example, there is absolutely nothing capitalistic happening with what central banks are doing. Capitalism is all about price discovery. Capitalism would be all for letting the banks fail in 2008. Capitalism would be all for not supporting artificially the economy and let companies that are making losses go bankrupt and companies that are doing good prosper. So unfortunately, what we have and is failing is not capitalism. And that is a misconception, unfortunately, that is being fed by the media to a lot of people, that these problems are, failures of capitalism. They're not. They're failures of a system, of a bastard system, if I might use that expression, trying to use some components of capitalism and eroding them with a lot of components of socialism. I'm from Europe and have no interest in who is US president, only that they have true democracy, which they do not, and neither do most nations and peoples in general. The Democrats have helped the US economy long term more than the Republicans. That's a big discussion, which we won't have now. There is no difference in the two parties in this country. In effect, there is only one party. Mr. Steve just said it. I agree. That's my point. That's my point, unfortunately, that the system has become such that the choices in all actuality are very limited and to less important stuff. A lot of political conversations today, but anyhow, the market is quiet. So let me cover crude, because crude had a very decent move yesterday. And Coach, do you have an interview?
Yes, you bastard. Go ahead, wrap it up. Who thinks Steve's a bastard? Give me a why. I don't. I'm just joking around.
Probably that was a bad translation from the Greek word I had in mind.
No, it was perfect. Anyway, yes. So great interview today. Raghee Horner is Raghee's been here for a while, so anytime you're ready, and she really has
absolutely
a real good eye. Yeah.
Crude faked people out with that big move lower, closing below the channel, and yesterday we actually posted an outside white candle. So in essence, we completely invalidated that move lower. I bet a lot of people got trapped in that. And this increases the possibility that before we see this break to the downside, we might have one more leg higher. Okay, something like this, perhaps a move towards the 61.8. Okay. Thanks, Coach. Enjoy the interview.
Okay, Steve. Thank you very much. Raghee, I'm really looking forward to talking to you again. I'm going to unmute you now. Hello, Raghee. Welcome back to Face.
How are you? How are you?
Good.
Great to be back. Great to be back.
Good, Raghee. Great to hear your voice. You know, we have to correct in 2020 how much time elapses between our conversations. What do you say?
I'm game.
All right.
I'm your Huckleberry.
I knew you were going to say that. Yeah, that's Val Kilmer's greatest line anyway. To share your screen, there's a little green box on the drop-down menu.
You got it. All right. Let's see. Which screen shall I share? All right. Here we go.
Your best one. All right. So, okay.
I think that's just the one in front of me. So
okay, that's fine. You know, Raghee, for people that, you know, really may not be familiar with you, and, you know, I consider you one of the pioneers for, you know, breaking the glass ceiling for women to come into the trading business. And, you know, you led the way for, you know, a lot of women looking into this and doing this now. So you're a trailblazer.
Oh gosh, you know, I'm just a trader. There's a great quote by Lynn St. James, the only woman to won the I think it was the Indy 500, and she said she loves racing because the car doesn't care if she's pretty, has a nice smile, is a man or a woman, and I kind of feel the same way about the markets. It just doesn't care.
It doesn't. It doesn't care. You know, it doesn't care what we're hoping for either. So, you know, I say that hope is the oxygen in life, but the carbon monoxide in our trading. So I remember, and I want to just acknowledge, I believe last time you were on was, you know, well over a year ago when Bitcoin was making its parabolic move to 18,000. You were in there early, and want to acknowledge one nice ride you had.
Gosh, you know, I think like a lot of purely speculative trades like that was something, it was a position I built going into the 2016 elections. Okay. And around the same time, they were confiscating rupee in India. And I remember my cousins and my nephew saying, yeah, we're buying Bitcoin. I said, you're buying Bitcoin? Back then it was trading at about $400 to $500. And I said, okay, you know, it's a currency, right? I don't care if it's digital or Forex. To me, it was just digital Forex. I'm like, okay, I'm game. So it wasn't wasn't like I had a big faith in it. I just realized there was flow. I think like a lot of us trading. There was just interest, there was attention, there was flow, and I'm a trader. I follow the flow.
Yeah, and a lot of people weren't as aware of it when it was a difficult time for India when Modi did it, because India was very much a cash and carry type of economy, right? So
Mhm.
you look for things like that to see how a population would adjust to that, because that experiment can happen again anywhere, right? War on cash, etc. So you follow the flow. So looking at the flow here on Euro Yen, you want to talk about that? Looks like we're attacking. What is that dotted white line? Does it represent a moving average?
Yeah. So basically, I like Euro Yen. I really like right now. I'm focusing on dollar buys. We've been dollar long since last October.
Okay.
Yen is getting added to that, because when I think about what the strength currencies are right now, what currencies would I be okay with being long, not just today and tomorrow, but weeks, if not months from now. I think the yen is second to the US dollar. So I also look at Christine Lagarde and what she's been brought in to do, which is basically clean up what's going on in Europe. And I don't think there's any chance the euro really gains on the US dollar or the yen in any meaningful way longer term. So corrections like this,
Yeah.
I'm absolutely game for shorting into. Now the white dots, sure. So all the indicators that I've got here, this one I'm just playing around with, so don't even worry about the one at the bottom there.
Okay.
All the indicators that I have are available free in TradingView. So none of this is me hawking an indicator. This is what's known as the
You're not a hawk, you're an eagle.
Depends on my mood. So sometimes what we try to do is think about reimagining indicators and ideas that already exist. So one of the things that I like to do early on in my career was look at exponential moving average crosses. And it can be technically messy to watch two moving averages intertwine with each other until you finally get a clean signal. So what we did is we basically said, well, what's going to be the filter, if you will, to kind of clean this up? And we realized it was going to be price. We can input a short exponential moving average length and a long. And essentially, when the 8 and 200 interact with each other and then interact with price in a specific way, those dots appear where the longer exponential moving average would be. Now, again, if you go to, this is on
Creative.
TradingView, obviously. If you head on over to TradingView and just look under indicators and strategies and type in Simpler,
Yeah.
SIMPLER, you'll see that the propulsion dots right there, there's no little lock. They're free for you guys to use. The grab candles are the other ones that I'm using, again, free to use. And then we sort of reimagined Nicholas Darvis, his work, in the Darvis box. So that's the other thing that I have running on this
That's a
chart.
new name to me, Rocky. Would you mind describing his work a little bit, or talk about him at all?
Oh,
I'm not
sure.
familiar with him.
Sure. So Nicholas Darvis gained popularity by a book, but that I believe is titled "How I Made $2 Million in the Market" or something along those lines. I can look that up on Amazon. I read it many, many years ago. It's published in the 60s. So this is pretty, he's a self-taught investor. I don't even know that I'd call him a trader. And he wrote a book, I believe it was called "How I Made $2 Million in the Stock Market." He was born in Hungary.
Okay.
And he was a dancer. And one of his gigs as a dancer, he was paid in stock. It was Canadian Railway stock. And he just put it in a drawer. He wasn't an investor. He just thought it was, whatever, garbage, and he just hung on to it. He pulls it out of his drawer sometime later, realizes that it's made him quite a bit of money, and he thought, okay, I got to learn what this stock market is all about. And then he basically, in essence, became sort of a momentum trader. So momentum to me means, are you looking for a market to break through, higher through or lower through a particular threshold? You're kind of a buy stop entry kind of person, sell stop entry kind of trader. And he played momentum, typically like 52-week highs. Now, that's obviously something I think you could do in the 60s and 70s. I think the markets are entirely too transparent and sophisticated now to have something like that, but he was onto something, and he automated support and resistance, maybe unknowingly, by using a pattern called a minor high and a minor low and a certain candle count in between. So we just automated all that. It's
Okay.
almost like looking at little breadcrumbs on a chart for key turning levels.
Wow. So, I mean, you're doing a lot of coding there. You work with the people at Forest Park FX to do some of this stuff?
I am a huge fan of what Justin and his team are doing at Forest Park. They are just, look, in my room, we talk about Forex and futures, and Justin is our, as I like to call him, our consigliere in the
Okay.
Forex space. So yeah, we're huge fans of what they do over there at Forest Park.
Okay.
I've done things with Justin before, and I absolutely recommend folks work with him. So
Okay.
as far as coding goes, I actually can code in Pine Editor.
Okay.
So that's one thing. I never wanted to be completely reliant on an outside coder. So I can code in easy language, ThinkScript, Pine Editor. Not great, but enough to get the job done.
Yeah, I mean, you're a renaissance. I know you don't trade.
I'm a control freak.
Okay. All right. Well, you know, maybe it takes that type of personality to be successful in the market. You know, so let's talk about what you're seeing here in Euro Yen. So you're talking about most likely a risk-on environment continuing for some time. And if you're positive on the yen, does that mean that we could be looking for the correlated asset yields to be heading higher as US dollar yen heads up?
So currencies to me are a much cleaner space than, say, stocks in some ways. Now I trade stocks and futures and Forex, but what's happening right now is kind of interesting. There's a complete and utter just blind eye to the macro environment right now. And I could get very salty and talk about the macro environment that I shorted last October and played until Powell put in his V bottom on January 4 with the world's most epic flip flop of any central bank that I know of.
Yeah, the worst
And,
December since 29.
look, Powell's red phone in his office somewhere started ringing, and his buddies were saying, look, credit's freezing, credit's frozen. Banks aren't lending to each other. We're seeing that again, hence the repo, the lender of last resort. The Federal Reserve is getting active. Is that what we see in a healthy economy? Of course not. Do we see $60 billion in not QE? Of course not. In fact, if you take a look at the St. Louis Fed data going back to July of this year, there's a distinct V bottom also in the balance sheet. So they've been adding to that balance sheet aggressively since July. And I'm sure a lot of your listeners already know all that.
What do you think? Do you have any kind of theories or gut feelings about what it is really about that banks will pay up that much for overnight?
Coach, if I may interrupt here, so far what we know is that the balance sheet has increased by almost 300 billion in 2 months. So, the 60 billion not QE so far has proven to be more or less 150 billion per month not QE so far.
I'd like to introduce you to Steve Volge, one of the partners
Hello.
here.
Hi, Steve. Yeah, I was listening to you earlier. Great stuff.
Yeah. So do you think, do you have any beliefs or ideas? I mean, they try to push it off as there were big quarter-end corporate tax payments, and the Fed hasn't really explained what's behind this except what they're doing to ameliorate it. Is there a bank with a big derivative problem or something out there that we don't know about that you have a feeling about, Raghee? You've seen everything.
Well, I think that and I don't know of any specifics, but I think we can kind of put our finger to the wind and know that a few things. Number one, we know the data that the Fed cites, whether that be inflation or growth, is data from some moon circling Jupiter, certainly not from Earth. We know that the BLS data peaked in August of last year in terms of inflation. So we had peak inflation in terms of last year's BLS. We know that we're probably going to get less than a full point of GDP moving forward. I'm not one of those people saying that we're heading for a recession. That's not tradable. At the end of the day, we could talk about macroeconomics all we want. It's a very engaging narrative. We take a look at a rate of change of money supply.
Doesn't make you
monetary policy.
pips.
It doesn't make us pips. It doesn't make us points. It doesn't make me ticks. But what I
Yeah.
do know is when I take a look at, whether it be the S&P or the Nas, the Dow, for me, a lot of the reason the euro yen comes up is I get a lot of folks asking me about dollar yen.
Yeah.
And I actually don't want to play dollar yen because I don't want to pit two strong currencies against each other. I know right now the dollar's gaining against the yen, but I'd feel a whole lot more comfortable playing something like Swiss yen or euro yen, and know that I feel that Swissy is probably not going to be gaining strength. It's been wishy-washy, but euro is probably my favorite. So going forward, if we do get that big rollover in the broader averages, sure, I want to short things like the communication sectors and discretionary and anything that's generally speaking high beta, high momentum. But if I can get long yen and stay long dollar, just not against each other, that's really where on the currency side of things, I want to position myself, and I want to be long dollars. Like I said, I have been now for the better part of 12 months, and looking at the
So,
euro US, I won't be
okay.
backing off that anytime soon.
Okay. Yeah. All right. And you know what? I was talking about this morning, Rocky, is, I want to give the break that the dollar had the benefit of the doubt that, maybe we're into a corrective period. We have to take out that 97 level for that to happen. But the action, like you're showing in the euro right now, is, we had two retests, the first breakout at 110 and then pulled back to 110. But it just doesn't seem to have any velocity in it. And it's so quiet that I'm, conflicted about the dollar. So you think this bounce in euro is another failing rally and we're not going to take out that white dotted line? Is that your bias?
Correct. I mean, I think we could test it. That's the 200 exponential.
Okay.
I think we could test it, and I'll short it all over again. Now, here's where, this is where choosing your instrument makes a difference. Primarily, my
Trade
positions in
selection.
currencies, well, not just trade selection, but also, for example, primarily I'm going to be shorting the euro US. I mean, that's still the main and will always be the main marketplace for currencies, but I'm not against buying puts in the 60 euro FX. I'm not against buying FXE puts, getting long puts either. So typically in this area, I'm going to be 80% short euro US, but another 20% I'll be in some of these derivatives. So the closer we get to 112, the closer we get to that 200 exponential, I absolutely want to be a short seller. And really, I'll be willing to build positions into this probably as aggressively as 1150.
And what's your line in the sand? Closes above this resistance?
My line in the sand is, this is going to sound crazy. I almost don't have one. I'm willing to take a lot of heat. I don't
Okay.
want to take a lot of. So this is where you get in is going to be a really important thing.
Because I
Some
actually think there's a chance for 114 if we crack that white line you have.
Wow. So
Yeah.
my theory for anything I do with the euro is this: if I want to be a euro bear, I have to be equally a dollar bull. And if I think that the euro is going to go to 114, I better have a very good narrative, not just for why the euro could be bullish, but why we would see a significant sell-off in the US dollar. So if I can manage that kind of
You can't
narrative in
come
my
up. There
mind,
is no narrative for a
I
weaker dollar.
I
Is that
can't
what
find
you're
a
saying?
narrative for a week. I mean, sure, there certainly could be, but I can't find a narrative for that pronounced. We're talking, say, 3 handles from where we are right now. I can't find one. Not that it could happen, but I can't find one, and therefore I feel pretty confident about the euro US staying below the 112 handle.
Okay. You on any of the commodity markets have any interest to you? I mean, crude has been a very difficult trade. Just the example this week, Rocky, of a lot of people had an up channel and then it looked like it was we had a breakdown day, and then it negated everything yesterday.
Sure. So we've been fading crude mainly when we get. So this is what I would consider, for the most part, a distribution market trend.
Okay.
In the Charles Dow way of looking at things. This
Wow.
particular wick, of course, we know was the drone strike,
Yeah.
and I am still short crude. I'm still going to continue to short crude. However, this is an interesting one. We have been in what I call a D-stage economy macroeconomically for a while. And we're going to be, I think, slowly, especially because of the printing, transitioning to a much more bullish environment for commodities. Now, I know OPEC is not expected to be increasing the production cuts, although compliance is high in both OPEC and OPEC Plus.
The Saudi IPO coming up play into this at all?
I think Aramco is never going to happen. I think two things are never going to happen.
A trade deal and Aramco?
Exactly. And this is not very ladylike, but I like to tell folks, monkeys will fly out of my butt before that happens. Again, not ladylike, but I want to
stay away from the zoo. Stay away from the zoo, Raghee. So
Aramco already canceled their U.S. tour and their London tour.
Okay.
So where is this thing going? I think they're. I could be wrong, but how many times have we seen this? This Aramco merry-go-rounds come back?
40 years.
Maybe. Yeah. 40.
Anyway, so that red area at 60, I actually have a descending triangle line coming up there. You regard if we get up there to be a decent shorting opportunity because this is massive distribution for about 6 months or so?
I would prefer crude stay below 58, ideally. And if it gets down to 54, I'll take my profits on my shorts that we've built from about 60 and 58. And then what I want to do is actually start getting long crude.
Okay.
Long crude and long RBOB.
You think that 50 level, which is, tested a couple times, is going to hold?
Yes, 52 to 50 and a half. I'm looking for it to hold. I'm looking for a lot more bullishness in commodities, generally speaking. I know it doesn't go with the narrative right now, the supply glut, and also the lack of demand. We know that EIA, IEA, and OPEC themselves have said 2020 looks to have lower demand, and we obviously have a global economic slowdown, regardless of what all the central banks want to lie and tell us. But I actually think there's a narrative for bullish crude. And my next move after the sell-off is going to be start to build a long position.
Okay, and since you brought up commodities, gold, bear market rally or the beginning of rebirth of the bull market or a continuation of the bull market?
Well, so again, this is where I'm kind of biased, and this is where, give me one moment here. This is where I'm biased. I've been long gold since the end of 2018. Again, when we started seeing what was happening in equities, the rollover in equities and gold bonds and the US dollar were the trio of markets. So right now, gold, like bonds, is in a distribution market trend. But kind of going back to Dow theory, Dow would believe that you really want to continue to respect how we got to chop. In other words, if we rallied to distribution, kind of favor the long side. If we sold off to a choppy market, favor the short side. So I'm still looking for oversold buys in gold. We're long gold from the 1455 area. And I'm just looking for the market to pop back up to maybe 1520. It doesn't clearly have the structure that we saw in June, July, and August. It's not that same uptrend, but I'm not looking to short gold. I still believe in a long position in gold. And that's really what we've been doing. So I'm still very bullish in gold.
Okay, nice look on that. The gold silver ratio looks like it turned. You do anything with that? Because, I know, Raghee, you could remember when the gold silver ratio had kind of a mean of 40. So even though we've come down from 93, 94 to where we are now, 86-ish, it still is a very high number of gold being preferred over silver. At 90, you just drop your Krugerrand on the table and get 90 ounces of silver.
As far as I'll tell you, I have not been really keeping an eye on silver.
Okay.
I don't have a position in silver. Most of what I've been focusing on is sort of treating gold as the currency that I believe it really is. It's just kind of an extension of what I look at in the Forex markets.
Okay.
And so, with that being said, I have not. Silver is kind of a widowmaker sometimes. Kind of reminds you of natty gas. You think everything's going along just fine, and then all of a sudden, it just whack-a-moles you. So, but most of what I've been doing is kind of this gold bond US dollar trio.
Okay, and so bonds good, gold good, and dollar good, and no reason to change the view on these trends that have been in force for a while.
So yes, I think that ultimately, as we see what's happening in the economy, looking at bonds, looking at gold, looking at dollar, we're talking specifically about some forex moves. That's why I'm as bearish as I am the euro. But I do want to be long dollar bonds and gold. And again, that's been 12 months, and I fathom that
Okay.
12 months from now I'll be talking the same thing.
And do you think there's potential for in the stock indexes here for at least a top with maybe a 5 to 10% correction? Or are you looking for
That's the question, right?
yeah.
When does the equity markets, when do they come to their
tipping
senses?
point? Yeah.
I don't see any time soon. Look, I think that anyone who underestimates what a political body the Federal Reserve is, and I don't mean just this one. I'm talking back to Bernanke, certainly Yellen. Yellen basically did the most glacially paced series of rate hikes in the history of ever. To say
Yeah.
that wasn't politically motivated is just ignorant. So they're all political bodies, and they all want to keep their jobs, and they all want to keep the Fed relevant, because obviously battle cries for destroying the Fed they're always out there.
Well, I know Super Bulls are talking 4,000, 4,200 in the S&Ps.
I would have to say it's going to be very difficult to see this market pull back in a significant way until after the election. There's too many folks who will want to see otherwise. Now, of course, things can happen
Right.
that are unforeseen. But as long as we keep the buybacks going, let's face it, why is the S&P and the NASDAQ up the way it is? It's because of the buybacks in Apple and Microsoft, right? You're seeing 3 years consistently of the largest buybacks ever in these stocks. And these
don't you see a danger in that, though, Raghee, that the corporate bond market is something that a lot of people are looking for to get the canary in the coal mine, that they borrowed money not for building plants or hiring, they used it for buybacks and dividends. Isn't it like they own their own company on margin?
The question is, are the buybacks dangerous? And
Okay.
and regardless of how it's being funded, the buybacks are dangerous because they're not reinvesting in technology. They're not reinvesting in their employees. I look at it in a much more basic way, where it's just, this is not doing anything to improve the value of the company. It's just reducing float.
Yeah, it was a great tax cut, right? Yeah, so that's what it's doing, reducing float. Raghee, what's the best way? And I know that, whoever was here and whoever sees this video later is going to want to keep tabs on your views, because,
Sure.
You're one of the best out there, Raghee.
No, I appreciate that.
I've interviewed over 1,000 people. So, after a while, you know who knows. And I'm glad to call you my trading warrior sister. And thank you for edifying our community today.
No, I appreciate the time, and of course,
Yeah.
my pleasure. So I guess the big idea is, I want folks to understand that the largest market that can tell you so much about what's happening in commodities and stocks are currencies. So to me, I kind of come from this background of what are currencies, what are commodities, what are macroeconomics telling me, and sure, that's going to play out in the stock market too, which, relatively speaking, is tiny compared to the world that we typically occupy in Forex. So ultimately, even though I do execute a lot of trades on futures, I do think that futures and Forex are very intertwined. And I do all this analysis over at simplertrading.com. And so, if people want to hear what I'm looking at, the tools that I use and so forth, it's over at simplertrading.com.
Okay. Well, thank you so much for being here, Raghee. I hope you have a great holiday season where pips rain down on you and people that work with you like a blizzard.
I appreciate that, my friend.
All right. So thank you so much, Raghee. I appreciate it. And I learned from you. If I did, I'm sure other people will as well. So again, much success in every area. Okay.
Thank you, my friend. I appreciate that.
All right, everyone. Raghee Warner, your website one more time, Raghee.
It's simplertrading.com.
Okay. All right, everyone. That's a wrap for Thursday. See everyone for TGIF. Remember, don't just count your pips, count your blessings. And I'll see everyone down the road tomorrow. Adios.